Okay, I need the PIN number.
All right, the PIN number is going to be 738903.
Okay, we are moving here. Okay, it looks like we're good to go.
Okay.
Okay, you should be connecting.
All right, perfect.
Hey, I got a question. Is there a way to eliminate that start page so when you open things up, that start page is always up there?
You want me to eliminate it?
Yeah.
Okay, yeah, let's see if we can do that. Just take it right out.
Right, but can we make it so it doesn't open up every time, or do you have to just cross the X there?
I'm not 100% sure on that. I know that if you just cross the account, I think it goes away for a while. I'm not 100% sure if it'll come back up.
Okay.
All right. So let's take a look at a couple of these. Looking at Capital One, huh?
Yeah.
That's a good one right now, especially with everything that's going on. We got, if you look at the actual financial ETF. Let's see, got a couple open here. ETF. Yeah, so you've got the confirming markets right here.
Right.
Crossing over right at the same time.
Hey, is there a way to do it where these bottom two rows aren't always, like if whenever I open these financials up, I've got to manually close these two up. Is there a way I can get it so when I do dual screens that this, whenever I click a chart, that bottom two rows is not in there or not?
No, you'd have to, you have that set as a default. So
Right, I realize that.
Up.
Yeah, it'd be like a double default. I don't know if you could do that or not.
No, we don't have anything like that. No, I don't. Not on the base file. I don't think.
Okay.
I don't know if we have it in the other one or not.
Not a big deal.
So when you're looking at, you can do this. You can set these up in a portfolio for yourself.
Oh, I realize I've done that.
Financial sector.
No,
okay.
I realize I've done that already. I just didn't know if there was a way where I wouldn't have to close those windows. But if I do, it's not the end of the world. I was just asking in case there was a shortcut.
No problem. Yeah, of course. So let's take a look at today. We were gonna go over the technical indicators, right?
Yeah.
All right, let's go ahead and take a look at those. I'll pull up an opportunity here. I'm going to show you a move with the Xylem that just happened, not right here, but a little, like maybe 4 months ago, right here, 5 months ago. Right here. Now, I'm going to add on all four of those technicals. Because remember, you have the price, predictive, and intelligence, and those are all on your base package. Those are coming with you when we register everything.
Good.
The four technicals are an add-on, so let's take a look at what they look like. MACD, you've already got the RSI on there. Stochastic, and TSI. Alright, so first thing we're going to do is see these a little bit better. I'm going to move this up. There we go. I'm going to move this up. Alright. So, first thing we're looking at, we're going to go over here, look at the left-hand side. So as you can tell, a little bit too far. So as you can tell, we have been in a downward trend over here. Now, you have a crossover. You have a crossover that happens right here. Now, looking through these four technicals, you are going to get, basically what they do is they build your confidence. You're going to have a little bit more confidence, maybe even take some bigger positions when you look at all four of these together. It's like having a 4-tier wedding cake right here. You know, if you have a 2-tier cake, it doesn't look as impressive. 4 tiers definitely more impressive. When you're coming over here, you're you're going to be seeing three different lines. This is the MACD. We have a moving average, the trigger line, and the difference between the two. So what we're looking for is this trigger line is going to be very smooth, as you see. The entire time it's very smooth. This MACD moving average right here, we want to see that blue line as it's going down, because it's a downtrend. We want to be seeing that blue line cut through that trigger line going up. If we see that trigger line right there and that line cutting through each other, one going up, the trigger, other trigger going underneath it, you're going to get this red line crossing through the zero line, which is showing you that they are crossing over. Now, when that happens, we see it right here, right at the time of the crossover. So that means that momentum is starting to shift to the upside. That's what we're getting there, okay?
Yeah.
Stochastic. With the stochastic, we want to see this yellow line be above the black line. Now, as you can see, I'm going to actually change this color real quick. Give me a second. Stochastic. Okay. I'll make it a little bit brighter, a little bit. Let's do orange. Okay, so you can start to see the separation starts right here. Start to see that orange line above that black line, starting to get above it. And it's actually showing you right around here, 2 days actually before it crosses over to the upside, you've got a little separation. The very next day, you still have separation, and then at the time of the crossover, boom. Not only do you have separation, but now you have movement to the upside. That red line right here is oversold. The green line is overbought. You know when things get oversold that they have a tendency to push back to the upside. That's what's happening right here. It's oversold, boom, starts to come back up, and as you continue, look, gap day, gap day, gap day. It's going up the whole time with it, right?
Uh-huh.
So that's the other indication right there. This is the, so I've been watching this the whole time. You can see it right here, oversold for a little while, and then all of a sudden, it starts to move up. Now it starts to move up a little bit here, and what happens? It starts to move up. It's predicting that it's going to go up, and it's not predicting it's going to go up fast, just a little bit. And it does. Right here, 2 days in a row, showing you, and then all of a sudden, at the time of that crossover, boom, jumps. What we're doing right here is we're looking for that to jump up quickly. People are trying to get in at this low period, and they're trying to ride it up. And what happens? Like I said, gap day, gap day, gap day. Everything goes up now, it's overbought. Now a lot of these things start to get overbought here. Overbought, overbought. But, even though it's overbought, they're still going up. That's where this comes in. The true strength index. The true strength is showing you, it's called the TSI. We can see it right here, crossover. Starting to get a little close, right?
Uh-huh.
Right there, crosses. It's telling you that the strength of this market is now starting to go up. And now it's above, oversold. And look at this. Even when all these bigger guys are saying overbought, overbought, look at this thing. Huge down day, no fluctuation whatsoever. This indicator right here works perfectly with the triple cross. Because as you can see, it was yellow here. Then the crossover happened, showing you that the strength has turned. And it's green this whole time. Now watch what happens when it gets a little close. It does get a little close right here. It's also showing you just a little bit of weakness. Just a couple little things right here going down. Doesn't ever cross over until here. And right here, it's starting to show some weakness. Now look what happens here. It's showing you the weakness right here. And if we look at that at a medium-term crossover view, it crosses over the very next day. This is giving you a precursor that the trend is over, and it's now starting to push to the downside. And look what happens. MACD, perfect. Blue line going under the trigger line. That's exactly what we want. Stochastic is already starting to push down. RSI, starting to show that people are getting out. Now all four of them are lining up again. Now you can go ahead and make money to the upside and make money to the downside. And look at that downside. Runs right back to where, boom, right back to this is record. It looks like a little bit of a support area right here, right?
Yeah, it does.
So there you go. You're riding it up. See that it's turning. Ride it down. Hit that support. Okay. Here's that support. Let's see if it. Oops. I'm sorry. That's something on here. Okay, there we go. I pushed it back, way back there for a second. Now that you see that support right here, it hit that support right here. Boom. Starting to head back up a little bit. Then look. Hit that support again. And then starts to take off. This is right now. This is you have gotten this prediction last night. Look at this. MACD, crossover, stochastic, crossing up, RSI, already starting to show you people are getting in. And look at true strength. The next day, true strength. Even on a down day, true strength is crossing over. And it's separated. Now it's going up. Now everything's going up. Every single thing. That was a perfect indication, 1013. On 1013, you could have gotten into that position and made really good money. You could have seen, you could have gotten in on a low day. Look at this right here. 6.5% in 9 days. $5 a share in 9 days. That's what you're looking for, right?
That's right.
That's exactly it. These indicators, what they're doing is they're just building on that confidence. You can find confirming markets. You can find, great opportunities to the upside. But when you add these on there, they give you that extra little nudge to say, you know what? We're doing options. You have 2 contracts. Why not go to 4? Why not go to 5? Because that is going to build your portfolio faster. It's going to be able to help you with that.
How do you avoid?
See how that works?
Yeah, how do you avoid not getting in during this chop area? Like if you were looking at the predictions, they would probably told you if you did your IntelliScan, it would probably told you to sell right here, and you would have looked and it would have said sell. I mean, if you didn't have this stuff, how would you? Well, I guess you wouldn't have because you see this short. So I feel very confident getting to sell here, and it really didn't do anything but turned against me. So how would you avoid? What I've been doing is I've been doing the IntelliScans of this week. And I've been going the up and down both ways, and I've been buying options or selling options in my demo account, and they've not been doing real good because I get a lot of these deals like this where it says to go short, and then a day or two later it reverses and goes up. So how can I avoid if I'm doing the IntelliScan, where it would say, now this is a shorting opportunity right here? How would I avoid that?
Let's take a look at this real quick.
Like there you might have seen it go long. That would have been go long. To the left, the green would have might have said long.
Well, let me show you this right here. Right here is the crossover.
Yeah, well, right here was a crossover too. Here, right here, you got crossover, and the IntelliScan would have probably said go long. And well, here you wouldn't because you see the red. Well, you see green here for a couple days though.
That doesn't look like it's going to the upside, does it?
Well, it doesn't, but I'm saying if you do IntelliScan, it would have said go long, and then you see green a day before, so you say, well, that looks pretty good. I'm going to try and go long. Well, this would have been okay. No, here it doesn't. No, here it doesn't. So I guess you'd almost want to maybe go back to the triple cross before you would do, before you jump in on the go, what you think right here is a go long, you'd probably want to do it, which is on what date is that? The 16th. You probably want to look at the triple cross first for confirmation, wouldn't you? So you don't make a mistake. You can also do that to see if those are going.
I'm going to pull this up one more time because I took the 3 lines off.
Yeah, okay.
All right, here we go. Now look. Does that look like an opportunity to enter?
Well, to me it looks, this is looking good, and the next candle would probably done good. The gray candle would probably been like this. So you'd say, hey, it just crossed over, and you'd be entering on this candle here, I would think. But I say you'd be entering up here, and it goes against you, and that's what I think. How do you avoid that?
But here's my question: does it look good from the software aspect? It does not. Because of the fact that these three lines are not in order. There's no spacing between these two.
Okay, you're right. Yeah, you're right on that part. In that case, you are right.
Yeah, it doesn't look good right there.
Okay.
This right here, kind of. But when you're looking at this crossover, and then all of a sudden this is a crossover, and you're seeing it flatten out, that doesn't meet the criteria. It's still not going up at that angle. It's flat now, and there's barely any spacing between here, and those lines are going up at a halfway decent angle. They're not going up too quickly. So right now, that doesn't meet it either because it's going flat.
Flat, okay.
What you want is something like this. You want something like this. Look at this crossover. That is fantastic. 1/2/3. Great spacing, great angles. That's when you take off. We're not looking for moves that are going to get you this up and down kind of thing. We're looking for moves that are really going to take off.
That's what I want, yeah.
And that's what we're looking for. And I've shown people this before, and they say, oh, well, why would you get it on the next down day? That's good for you, because if you get it on the down day, that's a low buying point. Boom, then you take off. The software is predicting up to 3 days advance. You can't just take that first day as its word. But you've got this great spacing, these great angles, got the crossover, and then we showed you the 4. We also showed you the 4 right here. At that same time, they're all lining up to the upside. They all look great.
Now, a lot of these moves I'm seeing and I'm taking, I'm using the RSI, and a lot of the moves, if I'm going long, very often, probably 90% of the time, the RSI is on the top line already. Would I not do that move of the R? Because it can still move for a while when the RSI is on top. So would I not take that trade when the RSI is on the top if I'm trying to do a long or not? Like when I want to do a short, if this RSI is almost right there, would I not take the move then doing the short? Or what are your thoughts on that if I use the RSI? I mean, it can go quite a ways down once it goes. The RSI can still hover along that line for quite a while as it's going down. So I'm just saying, should that negate the move, or shouldn't I really be real concerned about this? Be more concerned about these?
What you're looking for with the RSI is that you don't really want it to be high when you're trying to get in an opportunity. That doesn't bode good for you, even though sometimes, yes, you're right. When it gets up there, it does rise. Right here, it's doing that right now. It's up there and it's riding above it.
Right.
But what you really want to see is you want to see an RSI that has been low and is starting to pick up a little bit. So seeing this be oversold and then seeing it pick up to at the time of the crossover, boom. It's been predicting it to rise up, and then look what happens. It rises up even quicker. So right here, you can see right here, this prediction from here to here is going to go up. And it went up. And then the next prediction is going to go up. It went up. And then it keeps going. So the RSI, you don't want it to start at that high point. That doesn't give you any inclination that it's going to get any higher. Or, it might ride it a little bit. But not for those long trends, not for those big moves that you're looking for. You're looking to enter at the very beginning when that RSI is from being oversold and starting to come up. Once you start to see that and you start seeing them rise, that's the opportunity, because you want what I like to call room to run. With this RSI, if you get in up top, you don't have that much room to run. You might have a couple days of growth, but here is when you want to see it. You want to see it popping right around this area so that you have room for it to grow. The room for it to get up there gives you days of profits.
Okay, because when you look at the trades, when you do the Intel scan, if you're looking at the charts, probably 95% of them, the RSI is either at the top or the bottom, so then you'd be virtually getting no trades if based on what you're saying, which might be right. Because I say the trades I've been doing, some are working, a lot of them aren't right now while it's only a couple days into it. But I'm saying most of the trades, probably 95% of them, when you do the scan, the RSI, when it says buy, 95% of them, the RSI is at the top already. And when it says sell, almost all of them, the RSI is right at the bottom.
Take a look at this. Going to add to Intel scan. a look at our IntelliScan. 23, one day going up. That's 23 opportunities without putting anything in here. Take the RSI. Add to IntelliScan. Alright, here we go. So, now this is up to you where you put it, but what most people tell me is they do 65. No, I do around, yeah, you can do 65, you can do 65. Less than or equal to 65. Plus 14 out of 23.
Okay, so that's how you would do that. Okay.
Yeah.
So you set it below 65 for the up, and then but you know for the down, what would you do for the down? Below 35 or something?
Crossover coming up. These lines are a little bit tight right here, but this is going up. Oh, for the downward trend, I would say 35 to 40.
Okay.
Because what you're doing here is if you see something like, trying to find a good one for you. Let's see if we can do something like this, something financial. See, these lines don't look very good.
No.
Look what the RSI did.
Yeah, that's
the RSI
down.
was boom, and then went up.
Well, the lines are
That's what
lousy.
you're looking for. Basic materials might be going up somewhat, a little bit. So see, crossover. I mean, you got the 1 over the 2 over the 3. There's just not a lot of spacing between
No,
1 and
no.
2. But your RSI has been oversold back here, and it's trying to come up. It's really trying. Boom, cross that 50 line.
So if the lines were better, you take the trade, but right now those lines still aren't good.
Yeah, the lines don't. I mean, they're
I
going
wouldn't
up
do
at a
it.
good angle. This 3 is a little flat.
Right.
Yeah. Look right here. Crossover. 1 over 2 over
That's
3.
nice,
Same
yeah.
thing. Update. Very next day, get in low, ride it up. Place your stop loss appropriately. Get stopped out. Make money. To the downside, look at this. Look at that. It's lower than 40. What the RSI right here is around 45. See? 45. Then you've got it going to the downside. 3 over 2 over 1. That's what you're looking for. You're looking for those opportunities.
Okay.
Does that make sense?
Yeah. So basically, I look for the RSI below the 50% line. I guess that would be a pretty good for you'd be in pretty good shape as long as below or above there. You got some room to play.
Exactly, that's what you got. You got that room to play, and that's all. And that's exactly right. What we're looking for is for it to be on the opposite end of where you really want it. You know, you don't want to get into something that's completely overbought. So you look for the opposite end. You say if something's oversold, people are looking at it to get in at the low point, and then it could start to rise, and then there's a crossover. Boom, that's your entry point. Because when people start seeing that the RSI goes up, like right here, boom, it jumped up. Man, that looks like a good time for people who are day trading or people who are, really skittish. They'll take their profits. So you have some profit takers right here, and then boom, they took their profits, and that dropped the stock down.
Okay.
That's what you're noticing with this RSI when it goes up like that.
Now, did I understand right? The RSI is normally a lagging indicator, but on your software, it's actually a leading indicator. Is that right or not?
Yes, sir.
Okay.
Yeah, because you would have seen this RSI. Look, you would have seen it as a prediction to be high. And that's before it gets up to this day, and then so you see it on this day, and say, okay, well, if it's high, I might be playing a little cautious. You might have gotten stopped out on that day, or you might have got stopped out on that day. Make some money.
Okay.
Yep. So you have you have 7 more days with the technical indicators. After that, everything gets registered on your license, and then we put everything on there that you've purchased so far. So I just wanted to let you know that. And what we're looking at right now, and I just want to make sure of this, Pat, let me just bring everything up.
Yeah, I can give you some of the stuff I want right now if you want. We can go over some of that.
Okay. Okay, yeah, I've got about 5 minutes here before I got to jump on another call. I'm going to be a little bit late for my next call, but that's fine. That's fine. We've got, let's see.
We can look at that.
From me.
We look at the ETFs maybe. How do you open this here? The ETFs, I think, are kind of cut and dry. I think we just go with the basic. We go commodity, currency, leverage, short, spider, and I guess in the United States, of course, I think I've got one more left, right?
Yep.
Which one would you recommend with that last one? I don't really do the international thing means much to me. United Kingdom, I don't know if Canada or maybe Canada over the United Kingdom. I would think. What are your thoughts?
It's pretty difficult when you're talking about 8 when you have 8 out of 10. I've seen more people go with the United Kingdom than Canada. When they're talking about that, I've seen people get it by itself. International, Canada are probably the 2 lowest that people gravitate towards.
Really?
Yeah, because international, a lot of people don't really understand what that is. They're just looking at, leverage, fair leverage, bull for my U.S. stock. That's fantastic. They like all these other great things with the United States stuff. And then they see United Kingdom, and they know that's a good market to get into. I've seen people get into Canada as well because they have Canada stocks, helping them with their confirmation with those Canada stocks.
Well, yeah, I just don't know in the regular stock exchange if United Kingdom changes. I know Canada, like on Ameritrade Thinkorswim, I know Canada's on there pretty much, but I didn't know if United Kingdom was even on there for the most part.
I'm not 100% sure. I actually don't trade in the market, so that's why I just have to go with what people are picking.
Okay.
And that's what I've seen.
Okay, well, let's pick out 7 of those right now. Let me just hover over the 8th one and just see what we want to do with the 8th one yet.
Hold on. Give me 1 quick second. I have someone trying to message me real quick about what we're talking about. Oh, okay. So I have one of my colleagues over here. He just messaged me, heard me talking. So he was letting me know that he said more U.S.-based traders use the international ETF than the UK or Canada because it allows them exposure into other markets that they wouldn't normally be able to access. That's why they do international.
Okay. Well, then maybe we should just do that.
Okay. So take out Canada, take out United Kingdom, keep the rest of them.
Right.
And then the only ones we have to decide are the 6 futures.
Right. Now, I had a question on the 6 of the futures. I looked at the DJIA, Dow Jones Industrial Average. How would you trade that? I looked on my Thinkorswim platform. I tried to type in. How would that relate to something I could trade? Because you could make some pretty good profit on the Dow Jones Industrial Average, but I didn't see how to trade that on the Thinkorswim.
So how to actually trade it on the platform you're talking about?
Well, how I would trade if I can give you first of all, as far as the ETFs, I can give you the ones I picked out so far. I've got gold, I've got cocoa, I've got the 10-year treasury, I've got the ES, and I've got light crude. And if I can find out how to trade the DJIA, how that would trade, what would correlate to that as far as a stock or an option, I may be interested in DJIA from what I've seen. Unless you've got some really strong suggestions, something I'm missing.
Okay, so you've got a couple of the big ones that we talk about. Give me 1 quick second. I'm going to take this off full screen. I'm going to take a look at my... Because I've got a portfolio on my screen that pulls up the top 6. We usually do the big 6 on futures, and that is gold, light sweet crude oil, the U.S. dollar, and then the E-mini S&P, the E-mini Nasdaq, and the E-mini Dow. Those are the big ones that most people take when we talk about the big 6. Because you can look at the 3 big indices and figure out, where the market is going with those 3 big indices and then trade with the market,
So what are the big six? I can look those over some more then. So I know gold, the ES, and the light crude.
Yep.
Okay.
And then they do the NASDAQ, the E-mini NASDAQ, the E-mini Dow, and U.S. dollar index.
I guess the reason I didn't go with the E-mini NASDAQ and Dow is because they correlate almost exactly to the ES, and that's why I kind of look at that's almost duplicating.
That's true. Yeah. I mean, you can definitely use it that way. I have seen people just get the Dow or just get the NASDAQ report as well.
Right. And I looked at cocoa, and it looks like if cocoa seems to have a pretty good trend direction. I looked at cocoa versus coffee, and cocoa seems to have a more defined trend, and a longer trend, the nicer moving trend. That's why I chose cocoa. And then the 10-year Treasury, of course, because some of the trade T-bonds, and that's why I kind of picked that. But then I was still wondering about the DGIA. I'm still wondering about that. If there's a way to find out from your colleagues, not today, even maybe over the weekend or next week, how that would correlate if I look at a DGIA, how it would trade that particular ETF on the stock exchange or on the options market. How I would trade.
The DGIA.
Yeah, the DGIA, if I look at that and I want to trade that, how would I actually trade it? What would correlate to that as far as an option?
Well, correlate that. Correlate with it with the ETF. I actually have. Hold on a second. It'd be the diamond. Well, hold on, wait. Check the diamond. Check the DGIA. Diamond and hold on. Yeah, it's the United States ETF.
Is what?
It's the United States ETF.
So it'd be a diamond?
The diamonds correlate.
Okay, I gotta look at that.
They're in an ETF. They're in the United States ETF.
Okay. I will look at that. Let's leave that one blank, but I'll look at that because that's the one I want to see. If that will correlate, that might be the way to go. And like, if I wanted to buy like the RSI or something, it's too bad. I can't believe they don't include that. But what would that cost if I want to buy it when they're running a big sale or something?
We do have sales. I mean, the RSI, the technicals usually go buy one get one free. That's usually the lowest we can go. If you wanted to, with me, I could probably do a little bit better. I have to ask my manager, but she's done this for me before. Basically, buy one, get the other three free, which is $14.95. So if you're talking about buying one individually, might be able to swing $12.50. I don't know. I'd have to talk to her about it. But for an extra $240, you'd be able to get all four of them. That's what I have most of my customers do, and I know she's done that for me before a couple times.
Okay, well, I wouldn't do it right away, but that would be an option. I guess next time we talk, would you show me the free indicators, what they do, how well they're going to work? I mean, I've been working with the free stuff.
Yeah, I just showed you those three: the MACD, the RF, or the MACD, TSI, and Stochastic.
Those are the ones you got to buy, though, aren't they?
Yeah, those are the ones that actually come with. That's what I'm saying. If you were to get the RSI, it's $14.95.
Okay.
What I've had my manager do for me in the past is people buy the RSI for $14.95 and they get the other three for free.
Okay, so as far as technical indicators, everything you've got paid for, there's no technical indicators really available with the platform.
In the technicals, yes, these are the ones we have in there.
Okay.
We have third-party indicators from Larry Williams. He has indicators that are the electronic market accumulation and the professional sentiment index. Those indicators, since they're third-party, he actually created those, but he created them to actually work with our software.
Okay.
And he's a gentleman that has a book out that is, I can't remember the title of it, but what he did was he took $10,000 and made it into 1.1 in a year. So he's a pretty smart guy. He made these indicators for himself. His daughter started, or he did. Have you ever heard of the Robin Trading Challenge?
No, I haven't. I've heard of Larry Williams before, though. I use some of his stuff on my other charts.
Oh yeah, basically what he did is he did the Robin's Trading Challenge. He put $10,000 in and, made a 1.1 return. People thought it was just lucky. People thought he it wasn't real. So what he did was he gave his indicator to a 16-year-old daughter. She traded, and she had the second highest rate of return ever on the Robin's Trading Challenge. And no one's even come close to either of them in the following years. So they do work. They're very, very good. The two indicators that I'm talking about, they actually give you indications of major trend reversals days before they happen.